Welcome back. We are in conversation with Naveen Jindal, Chairman of JSPL. Coming back to the power sector, you have sold 1,000 megawatt to JSW. Has the advance payment from JSW come to you?
Yes, the JSW has already paid us 500 crores as was agreed with them. And now we are supposed to meet all the CPs, we are supposed to get all the permissions, all the clearances. We also need to get some more PPAs signed. And the long stop date for that is June 18.
Okay.
So hopefully by next year or even before that, we should be able to conclude the deal.
A bit of capacity has one PPA from Uttar Pradesh government.
Yes.
So what happens there? Do you see it coming very soon, the agreement signing?
Yeah, I hope so, because whichever government comes to Uttar Pradesh, they are going to require power. And what we have quoted is very, very competitive.
Yeah.
I mean, in the last 10 years, nobody has, there's no state has got these kind of attractive rates. So at sub 4 rupees, I'm sure they'll be very happy to take this power.
That's right. How do you see the energy outlook? There has been growth, but there's another report that has come out by Central Electricity Regulatory Authority that by 2027, thermal power is not required.
I know,
so how do you
I
see
saw that report.
Yeah.
So I don't necessarily subscribe to that. I do feel that thermal power also needs to play a very important role in the power mix of the country. We definitely need to encourage renewables. With solar and wind, we also must encourage hydro. But thermal also, as base load stations, they are very, very important.
Two of the coal blocks which you won in the coal e-auction, Tara and Gare Palma, what do you expect? How are you managing with the coal part,
well,
since you have to import for coking coal as well as thermal coal for the plant?
See, for steel, we are importing a lot, but for power, because there hasn't been much demand for power also, so we have been running at less than 50% capacity. So we are able to manage with e-auction, and wherever we have PPAs and we have linkage, we are able to get that coal.
Okay.
So on the coal front, our costs have gone up dramatically compared to our own captive coal block.
Right.
And there is definitely a shortage of coal. Especially in the region that we are, say in Chhattisgarh and Odisha, there is shortage of coal. So when we hear that there is surplus coal and the surplus coal, there may be surplus coal in certain areas, but these areas, Chhattisgarh and Odisha, there's shortage of coal for steel mills, there is shortage of coal for power plants. That's why you see premium going high, but a lot of steps have been taken by Coal India to enhance production, and I hope that they keep on doing that, because especially when Coal India is a monopoly, it is their duty that they must have enough production of the fuel, so that all the power plants, they can have enough fuel, and they don't have to pay premium to get fuel.
Okay, but that's the context that the government gives, that there should be a fair play competition in allocating natural resources. But anyway, moving on from that question,
so I want to tell you that whatever the government's policy was, that was fine. I mean, I appreciate. It's just when the people bid for it, if people bid, thousands of rupees of premium to get that coal, I just feel that they make themselves uncompetitive forever, for the life of the mine. Because if you buy from the market, prices go up, go down. In India, because we're dealing with a monopoly, prices are only going up, coal prices have only gone up, and now even the captive coal blocks which people have got after paying huge premium. So I don't know, I mean, the kind of industry, the competitive industry which we are running, we could not have afforded to be able to pay that kind of premium. And power generation, we want to continue to do with domestic coal. And hopefully, once Coal India increases its capacity, especially in these regions where there is shortage, then there should not be a need for us to import coal for power generation. When a lot of times, you in media, you keep asking us, are you going to divest this, are you going to divest that? So it's like, I know that's what sometimes this bank want you to do.
Yeah.
But it's like,
or the investors want to know.
or the investors. But I don't think that's a smart thing to do. You know, today is the worst time to divest something. I mean, today, I mean, for power assets, if they're operating at 50%, who's going to give a good valuation?
Right. So will you be looking at monetizing from your Oman business, because that's something which is doing well? There have been a lot of times we've heard in the news that it'll go for listing. So what will be the timeline? What will be the valuations, and when exactly will you do that?
So again, Oman is doing well. We're increasing the capacity, we're increasing the production of rebars in Oman. It's already the biggest producer of rebars in Oman, and it is doing very well in the entire Middle East market, and its quality has been accepted very well. So again, if somebody comes with the right numbers, which reflect true value of the unit of the company, we'll be happy to, you know, get that investment. If anything, if anybody wants to buy us cheap, sorry, you know, we are not desperate for that.
But will you not look at listing it? You will look at...
So listing, I mean, right now, no. Right now, no. But whenever if there is the right time for listing, we can look at that also.
But you'll be open to investment or selling it off completely?
No, we are not. No, we are not to selling it off completely.
Okay.
Like I've said. So we are in the business of selling steel and not steel plants.
On that note, we'll take a short break and come back and talk to Mr. Naveen Jindal on the vision for JSPL, from where it was and where it will be in 10 years. We'll see you right back. Welcome back. Welcome to CNBC TV 18. We are in conversation with Naveen Jindal, Chairman of JSPL. Let me now ask you, you've given your first interview on Young Turks to my managing editor, Shireen Bhan.
That was a long time ago.
That was a long time ago. And then you were a medium-scale company, and now you've come this far. What is your vision going 10 years from here on?
Well, we always had the vision of being the most efficient, the most profitable player in the industry, and we have been. We used to be the most profitable, most efficient player in steel, in power. Now with all these changes that you've spoken about, so suddenly we had to change tracks. There were lots of changes. You see, things keep on changing, and we'll see what we need to do. There are so many things that one can keep on doing in a steel plant. So we do not necessarily want to just keep on increasing the capacities. If there is a need to do that, we will do it. But today there is, steel is actually suffering from overcapacity, not in India, but internationally. So we have to see how to be, again, a very, very low cost producer, how to reduce your cost. How can we save on transportation costs? How can we, how can our processes be more efficient? Similarly in power also. So most of our investments are in steel, in power. How can we secure raw materials, whether it's coal or whether it's iron ore? How can we develop new grades of steel? So many things. Steel is very complex and very interesting, and there's so much that can be done. So we will continue to work in the best interest of the country, and we'll continue to, you know, improve our performance.
Will you dare to enter into new business apart from steel, power, mining, maybe commercial mining if the government approves it for the private sector?
I don't know, that's not been, we just love what we do too much, you know, we just love our steel plants, power plants. So I have not been that ambitious to do many things. I have not told you once that we want to be the biggest steel producer, the biggest power producer, but yes, for whatever scale we are, and we are, you know, we are a good scale, we are international scale, we want to be the most efficient, the most profitable steel producer. the most efficient power producer. And then we'll see, because opportunities keep on coming, you know.
Right.
So today our focus is how to reduce the debt, how to become profitable again.
The budget is round the corner. What are your expectations from the government for your sector, which is going to build the future of India?
I've stopped having expectations, because if you have expectations, you can also be disappointed. So I believe that whatever government does and is good for the country will have to be good for us. What's good for us is good for the country, and what's good for the country is going to be good for us. So I hope they bring out a good budget. I hope that it is growth oriented. I hope that they build infrastructure. I hope they make it economical to build in India, because our interest costs are very high, our transportation costs are very high, our taxation is very high. We pay the highest amount of royalty, taxes, cess, district mineral fund, and so many other things, highest royalty on coal, iron ore. So all these things make us, you know, uncompetitive internationally.
Right.
If we were selling only in India and you put the same taxes on everybody and stop the imports, then we have no problem. Okay, you put whatever taxes. But if we have to compete internationally, both from the point of view of exporting steel and also when, you know, other countries are exporting steel into India, when we are importing it, so there has to be a level playing field. So the Indian industry, until unless these systemic things are sorted out, how can we be internationally competitive?
Well, good point to end this interview on. Thank you very much for sparing some time for CNBC TV 18. We wish you all the best.
Thank you so much.
Thank you so much.